Okay, I'd like to take this opportunity to welcome everybody to today's event. This is Q3 earnings sneak preview. You got John Hopkins here. Tom Bowley going to jump in just a minute. Hey, if you're brand new to EarningsBeats, want to give you a nice warm welcome. Appreciate you taking the time to stop in and check us out. Thanks very much to our existing members, many who've been with us for a long time. Really great to have all of you with us. All of our events are recorded. If for some reason you're unable to stick around for the entire event, no sweat. We'll make sure everybody gets a copy of tonight's session. Do want to go over real quickly a couple of events that we do have coming up. So I'm going to ask Aaron to go ahead and pull up here we go. All right, so in addition, this is just a loaded month for events. And it's going to start with tomorrow, after today. We're going to have our monthly Max Pain event. This is an options related session. And this is where Tom will actually talk about companies that are potentially in position to make substantial moves between tomorrow night and Friday's option expiration, and even into early next week. We've had some terrific winners over the past couple of sessions. And Tom will also discuss a couple of the major index ETFs, maybe the QQQ, for example, the Spider, give you a sense just based upon all the calls and puts that exist right now, where things might be going, at least direction-wise. It's a terrific event. I found it very profitable personally, but it's a members-only one. Now, tonight's event is for anybody in the public who's out there, but if you want to get involved in this other one, you have to take out a trial. Now, in addition to this event, next Saturday, we've got another one coming up. This would be a good one. This would be open to the public. So anybody who's part of the EarningsBeats, stockcharts.com community, you have an opportunity to join in on this one. And this will include and feature Tom, along with Dave Keller, Chief Market Strategist, Stock Charts, and Grayson Rose. It's going to be a chart fest. A lot of charts looked at, some great ideas coming up. I'm sure you'll learn a lot of information by attending that event. Okay, then we move into next week, and we have a couple of events. Also members only. That'll be next Monday, October 18th. And basically what this is going to be, it's going to be a follow-up to tonight's session. So Tom's going to be talking a little bit about some methodology, talk about some earnings that are coming up, and maybe some companies to watch. By next week, a number of companies will have reported, with a ton getting ready to report next week and the week after. He'll be looking at some companies that could have the potential to make big moves up or down into earnings. Really don't want to miss that one. Also a members only, you'll have to be a trial member for that one. Then the last one I want to go over real quick is our model ETF portfolio. Tom had a session last night where he discussed the methodology for selecting the ETF portfolio that we present to our members every 90 days. So the new batch of ETFs will come out during this session next Tuesday. That's a members only as well. So based upon what I've talked about tonight, we've got these terrific events coming up. They're member only events. And what you can do, if you're not a member now, is you can sign up for a no cost 30-day trial. A great time to do it. You can just go right to our website and you'll see the membership, and you will see there that you can sign up for no cost trial. You get everything that we offer over the next 30 days. It's going to be just a huge amount of companies reporting earnings. It's just our time of the year when we get into earnings season with these events coming up. A lot of profit opportunities. So make sure you sign up for a 30-day trial, no cost, and you'll be able to decide at the end of it if we fit your style. Hopefully, the answer will be yes. Okay, that's pretty much what I wanted to go through. Again, we're going to, make sure we're recording this for everybody. If you have any questions, we'll try to save a few minutes at the end for Tom to answer. Sometimes I'll be able to answer questions if you come up with them during the event, and I'll just, email or go right back to you with answers. But I want to see if Tom's ready so we can get this thing underway.
I am here and I'm ready to go. How you doing, John?
I'm good. He's ready to roll, so I'm going to step aside. All right.
All right. Sounds good. Welcome, everybody. Yeah, this event tonight is just a kind of a sneak preview. We got earnings starting on Wednesday. So what I did is I just looked at earnings over the next 2 weeks. So the balance of this week and then throughout next week. And just going to walk you through some of the things that I'd be looking for. And I'll point out what I think are some of the stronger charts as we head toward earnings and some of the weaker. So I'm probably going to go over about 50 charts or so in terms of best and worst. And then we'll also take a look at, I'm going to show you a chart list. We updated a few of our different chart lists today. One of them was the raised guidance. And I always find it fascinating, these companies that raise guidance. And then you kind of lose track of them for a while and they pull back a little bit. And then they get ready to come back out with their earnings and they start moving again. So what I did was I ran a scan against all of the upcoming earnings for the next 2 weeks. And I ran that against our raised guidance chart list. And what I found was I think there are 46 companies that are on our raised guidance chart list that are going to be reporting earnings over the next 2 weeks. And that ought to be pretty interesting because, if a company comes out and raises guidance and then a few weeks later, lays an egg, drops a bomb on the market, that's not going to be received well by Wall Street. So typically, if a company's raised guidance, I'm not saying it's a guarantee, but it's certainly, I would say it gives me more confidence that a company is going to come through with a pretty good report. And if that company's been pulling back going into earnings, might be an opportunity to ride it up again with another earnings report. So I'll talk about that a little bit as well, but I'm going to go ahead and get started and take you all over to my screen. So 1 second. And I'm going to start off with some of the upcoming reports that I think look pretty solid as we head into earnings. So let me get this set up for you. All right, you should have Albertsons Companies ACI up on your screen. Now, when I was selecting these, the only thing I was looking at was their relative strength to their peers. So, in other words, here you've got ACI, which the DJ USFD is the industry group, and you can take a look at these over at stock charts. I'm trying to find one other thing here on another computer. 1 second. Okay, I got it. So if you're looking at these and you're looking at the charts, like on this particular chart, ACI versus its peer group, which is the food retailers group. I mean, this move right here as we approach earnings is pretty substantial. I mean, that's a lot of relative strength. So I wouldn't be surprised to see a really, really nice report coming out on Albertsons ACI. So this is one that I would keep on my short list. I think closer you get to 26, that's pretty important. Top of gap support. We're not too far from there. We got as low as 26.70 today. Recently, the stock was $34. So that's what I was talking about. You get these companies that have reported, solidly in the past, or maybe have raised guidance. And I believe that this is one of those that's raised guidance recently. And then they kind of lose, they kind of go out of favor for a little period of time. They almost like they're forgotten. And then they come up with earnings. And if those earnings are strong, many times you'll see another gap right back up. So anyway, ACI is one that I think is interesting. Now, what I haven't looked at when I put this list together was the AD line. So if we get strong ADs, accumulation distribution lines, if that's setting new highs as well, to me, that would be further confirmation that a stock is being accumulated into its earnings report. So those are just a few of the things that I'd be looking for. So I'm going to run through a number of these charts. For those of you wondering how long this is going to last, I would certainly hope that we're done by 5:30 at the latest. So an hour for this webinar. It is being recorded, as John mentioned. So if for any reason you need to leave, we'll make sure, copy of the recording is out to everyone. So don't have to stick around if you need to go, please go, but we will have it recorded. All right, so let's move on, and I'll be able to go through many of these charts much faster than that one. I just wanted to kind of get everybody up to speed on some of the things that I was looking for. So here you got America Mobile, AMV. And once again, if you scroll down, what you're going to see is versus its peer group. Now look, the peer group's been horrible. And one thing you should be thinking about is if the leader in the group reports or misses their earnings, that would be a signal to me that this group's really in trouble, because the whole group's been going down relative to the S&P. So it's like Wall Street already doesn't really care much for the group. So if you have a leader that looks really good on a relative basis and it doesn't perform well when the earnings come out, that would be another sign that maybe some of the other stocks within this group may struggle. But AMX here definitely had been uptrending, nice relative strength, and this recent pullback certainly could be an opportunity. ANTM, so this is Anthem, and this is in healthcare. Healthcare has not been very strong. In fact, it's been pretty weak of late. But Anthem, I mean, earlier today even, was at about a 2-month high. And there aren't too many healthcare stocks that have been doing that because healthcare has been getting hit pretty hard. But if you go down to the healthcare providers, ANTM relative to that set a new 52-week high at the end of September. So as we go into earnings, this is a company I think that Wall Street is certainly favoring, expecting maybe some pretty good numbers. Next up, Bank of America. Bank of America will be reporting this week, one of those large banks that will be coming out with earnings. I like the AD line. Even before the stock broke out, you can see in August when it was still not above the June high, the AD line was breaking out. So I think that was a pretty good sign. It's been one of the top performers relative to the banks. You can see it sitting up here near a 52-week relative high. So I expect a good report out of Bank of America. Then you got BK, which is Bank of New York. This is in the asset managers group. Right now, technically, tried to make a breakout today, but I think we've got a nice little cup here. Perhaps we pull back before earnings. The group has pulled back over the last 6 weeks or so, but BK has actually gone up and challenged that high. So when you look at it on a relative basis, you can see BK near a 52-week relative high. So once again, Wall Street to me is suggesting that maybe things look pretty good here. CMA, which is Comerica, just recently broke out to new highs. Of course, it's part of the financial space. It's a bank, and the banks, moving up to new highs as well recently. Look at the relative strength, though, CMA versus the bank index. A lot of strength here. I think Wall Street's putting money into CMA. We'll see whether or not it holds up, but I do like the stock. CSL, Carlisle Companies. This one's got a really strong AD line, as you can see, continuing to move higher, even though price action pulled back a little bit of late. Look at the relative strength. Relative strength, very, very positive for CSL. CSX. So now we're moving into the railroads. Railroads haven't been very good. I mean, you can see the AD line here is not confirming. AD line's horrible. So that might give me reason to pause. But you can see the railroad group as a whole has been going down for the last several months. CSX relative to the group actually just went up and put in about a 10-month relative high. So it's a weak group, and it's kind of like what I said earlier. I think it was with maybe ACI. But if you've got a poor group and one of the leaders comes through or doesn't come through and struggles, reports poor numbers, that to me would set the rest of the group up for failure. So this is going to be a key report, I think, for the railroads as we go into earnings season. Next up, another transport, Delta Airlines, DAL. DAL is starting to trend higher here. I don't know if you know, but airlines tend to do very well this time of the year, September through November. So this is the sweet spot seasonally for the group. And Delta relative to the airlines has been going up now for about 4 or 5 months, as you can see right here. And we've just now reached about a 7-month relative high. So Wall Street putting money in on a relative basis into Delta Airlines. This is one that needs to report good results, not just for itself, but for its group. DFS, this is Discover Financial Services, been trending higher, just sideways consolidating right now. And as it sideways consolidates, you can see its relative strength still holding up pretty close to its 52-week high. So I think Discover likely to have pretty good numbers coming up. And by the way, when I say good numbers coming up, that doesn't necessarily mean it's going to translate into a gap higher. I mean, I've seen so many earnings reports over the years. And if you've been following us at EarningsBeats for a while, I'm sure you've seen a bunch of them too, where a company comes out, they'll beat revenues, they beat earnings per share, they clobber them, and then they raise their guidance. Maybe they get an initial gap up, maybe they don't even get that, and then sell off for about 5 days straight. You know, it's just right back down the chart. So one thing you have to keep in mind is a lot of times you get that buy on rumor, sell on news. That's not unusual. But if a stock has been trading strongly going into its earnings report, and it reports those really good numbers that Wall Street's expecting, I like to look at those pullbacks as opportunities to get in. So it's not just about, I mean, I'm not looking, and I'm not doing this webinar because I believe it's a great strategy to go jumping into companies right before they report, because even if they report strong results, sometimes we don't get that positive reaction we're looking for. But what it does tell me are these are some of the stocks that I want to be thinking about trading. And so if they do come out with the good numbers, then I'm going to start looking for key areas of support that I'll want to trade these stocks. That's the reason I'm doing it. I'm not trying to, you know, pull out a crystal ball and say, okay, this stock's going to gap up 10%. There's no way to know. Especially if stocks have been going up a lot of late. If you get a group that's been hot and they come out with good results, many times that's the sell-off. That's when the sell-off begins, is after the news is out. So just keep all that in mind. EFX, you can see relative to its peer groups, been holding up near its 52-week high, even though on an absolute basis, it's been pulling back a little bit. AD line has pulled back quite a bit though, so maybe that's a little bit of a negative, but overall, I think EFX looks pretty good. GNTX. This one is going to be very, very interesting. I don't know if you remember, but recently I talked about 2 stocks that had shown pretty significant signs of accumulation, mostly because they kept putting in higher closes than their opens. And GNTX was one, in Open Door Technologies, OPEN was the other. And you can see GNTX continues to move higher. And just in case you're wondering, OPEN, look at the chart here. Market might be pulling back, but these stocks that are showing signs of accumulation keep moving higher. So even today, Open, which got up to 22.50, closed at 21.97. You can see that's 15 cents above the open. So it had another positive day in terms of closing price versus opening price. And you can see right here, there was that huge run of, I think it was 10 consecutive days where Open Door Technologies closed above its open. Doesn't happen very often to see 10 days in a row like that. So I take notice of those stocks, especially when you can see the volumes heavier than normal. When you look back, that's a pretty good, consistent amount of volume that's going along with all of these signs of accumulation. So I would expect some good things coming out of Open Door. Now, Open's not, I don't think they report until later in the month or maybe even in November. But I just wanted to point it out because we were talking about GNTX, very similar. All right, next up, HAL, Halliburton. So Halliburton had a false breakout today. I'd be a little careful with that. I don't like that short-term false breakout. It was up over 25, clearing the June high, and then came back down, closed at 24.68 on big volume, off of an uptrend. That is a doji. It's not quite a tombstone or graveyard, whatever, doji, grave. I can't even think of the name now. But anyway, after having that false breakout, closing back down near the low, I think you got to be a little careful with that type of candle, especially on big volume. AD line's not been very strong either, but when you look at the relative strength, you can see the last 30 days or so. Big move. We're now up to about a 5-6 month relative high on Halliburton. HXL also trying to break out. Interesting thing about this is in the aerospace group. So here's aerospace, which has been pulling back. On a relative basis, aerospace was just down at about a 10, 11 month relative low about a month ago. It's starting to bounce back a little bit. But I think overall, HXL has held up pretty well. And on a relative basis, it's one of the leaders within the space. So I'm expecting a good number out of the company. If not, again, that probably doesn't bode well for the rest of the group, many of which not performing well heading into earnings. So HXL, you want to keep an eye on. IPG, Interpublic Group of Companies, continues just to trend higher. It's been a little boring, a little slow mover, but hey, up is up. And when you go down, look at it relative to its peers, look at this. I mean, this has just been tremendous relative strength. IPG versus its media agencies peers. ISRG, Intuitive Surgical. I think ISRG, even though we've seen the pullback of late, we've been trending lower. Again, relative to its peers, just 4 weeks ago, it had made a strong, well, the group had made a strong run. And if you look at ISRG, this was probably about 7 weeks ago, it had made a huge run showing a lot of relative strength, and it's just been consolidating. So I think the pullback's probably an opportunity, especially for those of you maybe who don't mind holding into earnings. I won't. I can tell you I generally don't do that because of the risk involved. I've just been wrong enough and taken big hits to where I just don't think it's worth it. But hey, everybody trades differently. This is one that I think will come out with good results. We'll see. JP Morgan. JP Morgan was underperforming its banking peers for quite a while. You can see that down here. Back in, what was that, April, we were at a pretty low level relative to banks on JP Morgan. But since then, you can see we're starting to put in these higher highs, higher lows. So on a relative basis, JP Morgan's been strengthening. So I would expect good numbers here from JP Morgan. NDAQ, this is NASDAQ OMX Group. Look at the trend. I mean, this is another one. Maybe it's been a little boring. Got a false breakout here, just like we saw in Halliburton. So maybe short term, it struggles a little bit, but look at the relative strength down here. From this relative low, which was all the way back at the early part of March, this thing's been trending higher versus the investment services group for 8 months, 7, 8 months, something like that. So very, very strong action on NDAQ. Netflix has come to life. And that's always a good sign heading into earnings. Big pre-earnings move on Netflix. I like that. AD line's been strengthening. Look at the relative strength. 2 months ago, I wouldn't have touched this stock. But now look at it. Now it's again back to about a 5-6 month relative high. Volume's been coming in. AD line strengthening. It's trending higher. It's holding that rising 20-day on pullbacks. That's what you want to see. I think Netflix looks strong. Olin Corp. This is OLN. After a big move up earlier in the year, sideways consolidation. We have been consolidating sideways for quite a while. The overall group has been downtrending. So if your peer group's downtrending and you're going sideways, that means you're outperforming. And OLN has been outperforming. We'll see whether or not this is a problem. Its peer group versus the S&P 500 recently was at a 52-week low. So again, this is another one of those stocks that you really want to watch. They could be the poster child for an entire group. If they can't hit their numbers based on their relative strength here, then I would be concerned about the entire group. PG, Procter and Gamble, pulled back here recently, but this is another one where you look at the relative strength. It's been building, and it's currently at about an 11-month relative high. So the group overall, not good. Procter and Gamble, though, on a relative basis, this is Wall Street's placing bets that this is going to be a pretty good performer relative to its group. So we should be expecting some good numbers coming out. SIVB, this is SVB Financial Group. Went up, sideways consolidated, recently broke out. And you can see it trending now above the 20, which is above the 50. And there is your relative breakout, SIVB versus the bank index. So this is one of your leaders in terms of banks. And banks have been strengthening. So leading stocks and leading industry groups, hard to bet against those. Snap, S-N-A-P. All right, internet stocks taking a pause. You can see right here, internet been under a lot of pressure the last 6 weeks. Snap, though, is going sideways. So look at the relative strength that's been building again in Snap. Just recently hit about a 7-month relative high. So if internet stocks, I'm a little kind of wondering what's going on here and how they're going to do in earnings season. You can see just recently on a relative basis to the S&P, they went down to about a 3-month low. I don't know if that's telling us something about this group or not, but when Snap reports, that will help give us some clues, because if Snap can't outperform, then I think we could have some issues with some of the others. Netflix, like I said earlier, that's included in the internet space. Netflix looks very strong as well. So these are going to be 2 big ones to watch. Tesla, this one remains one of my favorite stocks. Been kind of boring of late, just keeps moving higher slowly, but it's been moving higher. AD line broke to a new high all time, even though price has not yet broke back above that January high. So I think stock's being accumulated. Autos are moving higher, and Tesla, even though it's pulled back a little bit over the last 4 weeks, has been moving up on a relative basis. So I think Tesla is going to come out with some good numbers when they report, and I believe they report next Wednesday, maybe. Double check me on that. VZ, this is Verizon, trending down. It's down at a 52-week low. What could possibly be good about this? Well, fixed line communications have been horrendous. And Verizon, relative to the group, is actually moving up to about a 10-month relative high. So it's good versus its peers, but that AD line is still horrific. It's down at price support. There's nothing more important to me than price support. So if we cannot hold $52 on Verizon, I don't think I would care about relative strength. I don't like a breakdown like that. A 52-week low in this kind of market environment would not bode well. I mean, the stock needs to turn around here. WHR, Whirlpool. Whirlpool's been trending down. And I actually, thought it was going to hold this 205 area, which it is not. It's continued moving lower. Volume's picked up. AD lines weakened. But you might not realize that it was at a 52-week relative high to its peer group just less than 2 weeks ago. So this is another one. If it doesn't do well when earnings come out, then look out for the rest of the group. Probably not a good sign. WIT, got my last 2 here for the best charts. YPro, WIT, trending higher, pulled back a little bit, heavier volume. AD line's definitely moving lower, but just recently we set a 52-week high about 3 weeks ago relative to its peer group in the computer services space. And you can see we've been in this uptrend for quite a while. So it could be that this pullback's a nice opportunity for YPro. And the last one I'll point out here is Xilinx. Xilinx actually just a couple of days ago, Thursday of last week, set a new high, went over 160. And look at the semis down here. Semis have pulled back quite a bit. So on a relative basis, you can see Xilinx moving up, trending higher, and now probably at an 8-month relative high versus its semiconductor peers. So pretty good relative action there. All right, so what would be the opposite? What are some stocks maybe that you got to be careful with going into earnings? Well, I'm going to be not very comfortable with stocks that are downtrending versus their peer group. Wall Street can put their money wherever. Think about it. They send out their analysts out and talk to management. We can't do that. I can't pick up the phone and call management. Nobody's going to talk to me. But they have, their analysts. They sit down with management teams, find out what's going on in their business. Where's their operating margins going to come in? What's competition doing? Do they have any new products? If so, what's the traction? What are sales looking like? What are your orders? They go through all this stuff, and then they go back into their offices and they buy for themselves and their clients. And so when you look at relative strength, it's telling you a lot of times, essentially it's giving you a lot of fundamental data, even though you're looking at the charts and you're thinking technicals. What goes into that is a lot of times the market is already projecting what is going to be reported. And that's why I think technical analysis is so important. And I mean, this is coming from a 20-year practicing CPA. I was in public accounting for 20 years, and I don't even look at financial statements anymore. I don't even care about financial statements. Just give me the charts. I want to know what Wall Street, because Wall Street's always looking ahead. Wall Street's not looking at what last quarter is going to be. Wall Street's looking at what the next quarter and the next quarter after that are going to be. And, kind of within the context of where are the right areas of the market to invest in? Should we be in technology? Should we be, looking at consumer staples, because we want a protection in the event the market falls back? I mean, all of those things help us develop our strategy. But anyway, Xilinx had a nice breakout. So now we're looking at the not so great charts heading into earnings. Let me show you some of them that I think could struggle. First one is Allegiant Public. So this is in the business support services area. AD line really is weak, has fallen apart on the selling. You can see the volume's been pretty strong. It's going down almost every day. But look at the relative strength. I mean, we topped out all the way back in May, and we have been trending lower ever since, down near a 52-week low relative to our peers. I mean, Wall Street's certainly not thinking we're going to have a big report. ALV, Autoliv. So Autoliv downtrending here. AD line actually pretty strong, and it has last few days broken back out to the upside. So the good news is, it looks like maybe we're trending higher. PPO's broken up out above this zero line. AD line strong, but look at the relative strength. It's in the auto parts space, and been downtrending just recently, a 52-week low. So it's not that the space isn't very good. I just think there are probably better stocks out there in this space than ALV. And this is the flip side of what I was talking about earlier. Now you've got a really poor stock in a group. And if you go back down here and look, this is a group that a month ago was setting a 52-week low, but starting to strengthen. So if you get one of the worst stocks in the group to come out and beat estimates, then you got to be thinking that maybe some of those other stocks that are strong stocks within the space will have really solid results. So, early on, how the market trades can be real critical to how you want to trade in, throughout earnings season, the balance of earnings season. American Express, I think, is going to have a strong report. Excuse me, a week. Wait a second. This one, I think I put them in the wrong column. I did. Yeah, I thought AXP was strong. This is actually one of the better stocks. I don't know why I put them in here. It's just oversight. But you can see AXP relative to its peers, 52-week high. I love this little cup here. It looks like a handle. If we break above 180, I think this is a stock that's going to run above 200. So watch for that. But that relative strength right there, I think looks really good. And the group as a whole, coming off a recent low, has been starting to perform pretty well. So I would expect American Express actually to perform well. So my bad there. I put them in the wrong column. Next up, BlackRock. So BlackRock's been downtrending, and AD line downtrending, and relative strength has really just kind of fallen off the table here over the last few weeks. And we're down now near a 52-week low, relative low. Now, maybe it's for no reason at all and shouldn't have gone down there. But I never take that approach. I pay attention to what Wall Street's saying, and Wall Street is saying this is not the stock we want to be in. Doesn't mean, again, that we won't have a pop up after earnings come out. But if they miss and they pop up with that, I'd use that as an opportunity to get out if I'm in it, or potentially to short if that's your strategy, if you like to short. Citigroup, I think, is, when I looked at the large banks, I thought this was one of the worst looking companies within the space. So Citigroup, after setting that high in June, it's been going sideways, but sideways isn't very good in a market where we just saw banks post, break out to new all-time highs. Or actually, I don't know if it was all-time highs, but 52-week highs. And if you look down here at Citigroup, relative to the bank index, it's near a 52-week relative low. So Wall Street, certainly prefers Bank of America. What were some of the others that I talked about? CMA. Some of those stocks, I think, look much, much better than Citigroup. We'll see how Citigroup reports. Commerce Bank shares. This is one that actually looked pretty good for a while. You can see the AD line was going up, price action was going up. Actually, the relative strength, I think, topped maybe close to a year ago, but look at this relative weakness now for the last 11 months, just consistently to the downside. Banks, 52-week high, and yet CBSH has been downtrending for the last 6-7 months. Doesn't look like it's going to have a very good report. CCI, Crown Castle, trending lower, AD line starting to fall. And then you come down here on a relative basis and you can see moving to about a 6-7 month relative low here. So that's not exactly what you want to see heading into an earnings report. CP, so another railroad. So remember, we talked about, CSX, being one of the strong railroads on a relative basis within the group. Well, here's one that is not so strong. So if CSX reports poor results and they've been one of the leading stocks, then something like Canadian Pacific Railway, I would expect to have even worse results. AD line near 52-week low, and look at the relative weakness moving down toward its 52-week low as well. So if I look at a group like railroads and I see CSX and I see CP, what Wall Street's telling me is that CSX is the better buy. Now you can do what you want with that, but that's, Wall Street's putting their money to work. They can buy either company, and just based on performance, CSX is outperforming. Another way to look at this would be doing something like CSX : CP. Then you can do a price relative chart and then get rid of the candlesticks. And so there's your CSX versus CP. It's another way of looking at it, but we're near a 52-week high, relative high. CSX performing versus Canadian Pacific. All right, next up, Dow, DOW, so Dow Holdings, been trending lower since June. Look at the AD line on this one, completely falling off the table. Been trending lower relative to its peers for 8 months, 7-8 months. Wouldn't be expecting a lot come earnings time. All right, Ericsson Telephone trending lower. AD line, horrific. Relative strength, awful. It's come back up here just a little bit last couple of weeks. Probably an opportunity to short. I mean, we're up here against resistance. I don't know. I'd be very careful with the stock. GGG, this is Graco, trending lower. This one was trying to break out not that long ago. Trending lower here. AD line weakening, and then again, 52-week relative low versus industrial machinery. So and industrial machinery has been moving lower. It's at a 7 or 8 month relative low to the S&P. So a very, very weak stock in a weakening area of the market. Not exactly what I would want to be holding when earnings come out. J&J, Johnson & Johnson, at a high in August, but it has been trending now below that 20-day EMA. Volumes picked up a little bit on the downside. You can see the AD line moving lower. That's been, that a lot of the selling, I think, reflected there. And then relative to its peer group in the pharma space, we were just down at about 11-month relative low. So Johnson & Johnson not getting a whole lot of love from Wall Street. KMI, this is Kinder Morgan, starting to strengthen here a little bit. But look at the AD line, horrible. And it's in the pipeline area, which has been breaking out. So look at KMI relative to its pipeline peers. Not exactly strong. I mean, when your group is all breaking out and you're still trying to catch up to highs, you're not even close to the high that you were at 4 months ago, you're not going to be doing very well on a relative basis. All right, LAD, which is Lithia Motors. This support area down around 310, I'd watch pretty closely. AD line struggling. Look at the relative strength versus specialty retail. Not very good here. So LAD, not expecting much. Lam Research. A lot of times I don't talk too much about semiconductors heading into earnings reports because they tend to be pretty strong, a lot of them. But Lam Research, again, you got pretty good support coming in here around this 550 level. I'd like to see that hold. AD line started to roll over. Look at the relative strength the last 4 months. LVS, Las Vegas Sands, you're in the gambling area now. It's been going down for months and months and months. Saw a little pop today, bounced up against that 50-day, against gap resistance, really struggled, pulled back off of that by the end of the day. But you can see on a relative basis, this is one of your weaker stocks in gambling. So Wall Street not liking much of the stock here. Manpower, MAN, another one, you better watch that 105 level. It's been going sideways for a while. Its group keeps moving up. I mean, it broke out here, now just recently broke out again, and yet Manpower is closer to breaking down than it is to breaking out. Relative strength, the last 3 months, horrible. So Manpower, for whatever reason, not a favorite of Wall Street. MKTX, this is Market Access Holdings, 52-week low. I mean, I don't need to say anything else. In this market environment, if you're trading at a 52-week low, something is wrong. And on a relative basis, I mean, it has just been in the basement for quite a while. So if you're going to be in investment services, this is not the stock, in my opinion, that I would be risking my money on. PGR, so this is Progressive. Recently got these bottoms coming in here, just about 90, maybe just below 90. Really want to hold on to that. AD line falling apart, relative strength or relative weakness here. You can see a 52-week relative low. So Progressive not looking very good. PPG bounced a little bit here in the last 5 days. Volume's, decent. AD line trying to bounce back a little bit, but it doesn't change the negative relationship here versus its peers. It's been trending lower since that high all the way back in May. Recently got down fairly close to a 52-week relative low. So I think you got to be careful with PPG. SAP, so now moving on to software. I tell you, get a software stock that's trading at a 6-month low when the overall group has been doing this over the last 6 months, then you got problems. And SAP on a relative basis now at a 52-week relative low to software. So it would be good for the software space for SAP to report good numbers, because that would probably bode very well for some of the leading software companies. But right now, SAP under a little pressure. SNA, this is Snap-on, another one that went down, pretty good volume in June. It's been going sideways, just can't really catch a bid. And on a relative basis, it went down initially, and it's still just kind of, going sideways with maybe a little bit of movement to the downside. Don't like the chart, don't like the way this one's setting up. I'd be careful. STX, which is Seagate Technology, very similar. You had good volume back in May, got a nice breakout, and then we've been trending lower ever since. AD line going down with it, relative strength going down with both. Not a fan here. Just a few more. We've got Pterodyne, set its high all the way back in February, been trending lower. AD line finally weakening as well. And look at the relative strength. This is another semiconductor stock, and then on a relative basis, trading at a 52-week relative low. Taiwan Semiconductor, another semiconductor, sideways for a long time. AD line down at a low, relative strength been going down for quite some time. Not interested. VFC, this is in the clothing and accessories area. Trending down, needs to hold this support down around $65. Trying to move up, but it keeps using, you keep seeing all these tails where we move up, looks like we're pretty good intraday, and then the bottom falls out. And that's been a problem. As you can see, the AD line continues to weaken. And on a relative basis, the stock's been downtrending for many months. Last one I have for you, VLO. This is Valero. Valero Energy. Trending back up, but it hasn't broken out. Not too many energy stocks have not broken out. These stocks in the exploration and production area, I mean, you can see right here, we just got a breakout and it's been going straight up and it's lifting this stock, but on a relative basis, it's down near 52-week low. So yes, the stock's going up, but it's going up because so much money is rotating into energy. It's not because this stock is being favored on Wall Street. It's just that there's so much money coming into energy that it's going everywhere. It's lifting all energy boats right now. But I don't like this one relative to its peers, so I would personally stay away. Those are the best and worst, what I see over the next 2 weeks. Now, the last thing I wanted to do was just point out, one of the things I did is I put these upcoming earnings reports over the next 2 weeks into a chart list. And there's about 143 companies in it. And if you know, when we get into earnings season, we actually provide to our members and even to our EB Digest members, our free members, we provide upcoming earnings chart lists for every day throughout earnings season. So you can quickly, when earnings come out one day, you'll quickly be able to see, okay, where are the positive reactions, where are the negative reactions to earnings? That's really important. So, so we're going to have that. That'll start back up again, I think, on Wednesday. So you can be looking for that, those upcoming earnings chart lists that we do. But what you can do with those upcoming earnings chart lists is exactly what I've done here. I actually ran a scan of the upcoming earnings over the next 2 weeks against our raised guidance chart list that was just updated today. And what we have here are 46 companies that will be reporting over the next 2 weeks that have raised guidance in the last 3 months. Now, I mean, maybe that interests you, maybe it doesn't. But I certainly think it's worthwhile maybe keeping an eye on some of these companies to see if companies that have reported or have raised guidance recently, if they do well when they come out with their earnings reports. I would not want to be holding one of these if they don't do well, because I don't want management teams coming out raising guidance and then reporting missed results when the quarter comes to an end. I mean, that's going to be frowned upon on Wall Street. They are not going to like, analysts will not be happy. And it's hard to build trust again with Wall Street firms when you do something like that, you know, raise guidance and then miss, that would not go over well. So anyway, I just want to show you 46. So of the 143 companies that I reviewed, now I think the ones I just talked about with you, but probably like 50 of them or so. I don't know. I didn't count how many companies how many charts we just went over, but probably 50 of the 143. You know, all the others were a little bit more neutral bound. But then you've got these 46, some of which I've talked about and some of which I hadn't. I talked about Albertson's ACI. I liked that one. That was one of the best charts that I talked about. I think it was the first one I went over. Well, maybe it's helpful to you to know that they also raised their guidance in the last 3 months. ALLE, which has been an underperformer, raised guidance recently. So that's kind of interesting. Anthem, I talked about, was a strong stock. They raised guidance. So pull the chart up. And I don't know when they raised guidance. I'm not going to be able to tell you. I don't have that date. But at some point over the last 3 months, they raised guidance. My guess is that it was probably earnings. Whenever they reported their earnings, that's when a lot of companies will either raise or lower guidance. But yeah, I mean, this company's gotten beaten up on heavy volume recently, but it also made a huge move prior to this. And all the, oh, wait a second, this is a semiconductor. I'm talking about healthcare. ASML is not the one that I picked. So let me go back. My bad. ANTM. This is Anthem. This is the one that I was talking about. So ANTM is one of the stocks in healthcare that I really like because it's been going sideways while the group's been going down. Well, this one did raise guidance as well. So I would expect a good report out of this company, and they're already outperforming their peers. Now, how that's going to translate on the charts, we're going to find out. But, you know, you can take our scans and run them, or excuse me, take our chart lists and run them against one another. So you can take, you know, you can run, I think, what was it, that bullish trifecta chart list that I did, where I took any company that was in our strong earnings chart list, our strong AD chart list, and also in our raised guidance. So strong earnings means they had to have beaten top and bottom line, revenue and earnings per share in their latest quarterly report. That's the only way they can get on the strong earnings chart list. Strong AD is just that, strong AD. Your accumulation distribution line has to be rising, a sign of accumulation. And then finally, the raised guidance chart list suggests that at some point over the last 3 months, the company has raised its guidance. So that's why I call it the bullish trifecta, because any company that's on that chart list has been included on the other three. So I think that's a very interesting group of stocks to be considering. So all these things, we do for our members. All right, that is basically it. I don't know, John, if you have some comments or questions.
Couple quick things here. Are the weak companies you're talking about also raised guidance recently? I don't know if you know the answer to that.
Well, that's what I was just saying. I mean, there are some on there. ALLE.
Got it.
Has been in a downtrend. Doesn't look very good to me on the chart, but they were still among those that had raised guidance. My guess is that most of those on that rate or on that last chart list I was just showing, that rate guidance chart list, I would think most of those are going to be charts that I like as opposed to charts I don't, but I didn't go back to quantify how many were on each.
Okay. Somebody's asking if recording will be available. Absolutely. Should have that out to you this evening. So that takes care of that one. You already talked about the chart lists that are available, that will be available. So that's taken care of. I think that's pretty much it.
Okay, sounds good. Well, we will be doing this again in a week or so. And when we do it, we'll be looking not only at future earnings, but also we'll be able to look at some that have been coming out. And we'll talk about some of those reports that look really strong as we go forward. So
yeah, and I do also want to mention, again, tomorrow's options Max Payne webinar. If you're currently an existing member, subscribing member, or on trial, you get to attend that one. I'm telling you, if you're not a trial member, it's worth taking out just to come and get educated, even if you don't end up doing anything with any of the potential candidates. It's a great directional event I have found, and I just encourage you, take the trial, come and learn something new. Very powerful sessions we've had recently, Tom.
Yeah, I mean, and all we're looking for is temporary moves to the upside, because a lot of times market makers have they have some money at risk. And so, if you look back, 2 weeks after options expiration, there's going to be really no impact, because if a stock gets hit and goes down because there's so many in the money calls, well, once those calls expire, a lot of times those stocks that pull back go right back up again. So if you look in 2 weeks, there's not really been anything, you're not going to suspect anything. But we get some of these moves heading into options expiration, or maybe just in the beginning part of the following week, which, is pretty amazing sometimes how these companies, work. So I think it was right here. This is Autodesk, just to give you an example of a couple of these. Autodesk, so options expired right here. Now, we calculated Max Payne to be up here at around 306. Now, didn't get up to 306, and I don't look for it to go to 306 when it's trading down at 280. But what we do look for is perhaps directional moves. So if you look at the stock, this was Tuesday before options expired. It was about 280. By the time Friday rolled around, we were up into the 290s. It's not that it's a healthy stock. And you can see we actually, a few weeks later, went right back down to a new low. So that's what I was talking about. You might look back and may not even suspect anything, but that probably saved market makers millions of dollars by just having that temporary little 2 or 3 day pop to the upside. So that's really what we're looking for, when we get into these. Now, this one, Biogen, didn't really do anything, just kind of went flat. So that one really wasn't anything. But Nordstrom's, look at Nordstrom's. Nordstrom's, the Tuesday before was like a 26 and change. A week later, it was up probably 10 or 12%. And look where it topped out at. Now, I don't expect to hold it for all the way until the 27th of the month, but it literally went up a couple weeks later, 10 days later, right to the Max Payne level, and then went back down to reach those lows again. So these are just, short-term moves that we're talking about. I think Plug was another one that did well. Yeah, I mean, it was around 25. A week later, it's 28, moving back toward that Max Payne level, and then went right back down again, tested these lows. Now it's starting to come back up. But that's what we're talking about with Max Payne. It's just a short-term 3 to 5 days, we're looking for moves in a certain direction, one direction or the other. But yeah, I mean, I think the last few months, some of the trades have been absolutely phenomenal. And that's coming up tomorrow night. You do have to be a member, but you can be a trial member. So you can just take out a 30-day trial. It's free, no charge whatsoever. And check out our service for an entire month, including max paying tomorrow night. But
Hey, listen, you might have already answered this one. I know you talked about various chart lists. Somebody's asking if the 50 or so charts you went over tonight are going to be in a chart list for paying members.
I don't have them in a chart list, but I mean, they're on the recording, so you can always come back and refer to it. I mean, we have so many chart lists. We probably have about 18 of them or something, or 20 that we have out there for our members. And to be quite honest, I'm not sure if there's a limit that we're going to be able to, provide to our members through stock charts.
Yeah, I'm hearing you.
At some point, we may break the bank in terms of their memory or whatever that,
Maybe we need a new, I was just thinking like a new line of service for charter members.
Yeah. Last thing I want to mention is don't miss out on Chart Fest on Saturday. That's going to be a lot of fun with Grayson and Dave from Stock Charts. I always enjoy getting together with them, and it'll be on a Saturday, so it'll be pretty casual. And we'll be going over a ton of stocks. So I think you'll really enjoy that. And it's a completely free event. So love to have you for that. But I'm done, John, unless you have something else. Everybody happy trading.
That's it. See you all tomorrow night.